Well, Asian markets are opening higher this morning after a tech-driven rally on Wall Street overnight. So it's gains of about 1% for both the Nikkei 225 and the Kospi. And we're seeing the ASX 200 just managing to go above the line, while some gains for the NZX 50, it's up about 0.7%. Samsung Electronics and SK Hynix, they're leading the gains in South Korea this morning. Shares are now recovering after the tech giants announced massive investment plans yesterday. We're also tracking the Japanese yen after it fell to a more than 40-year low against the U.S. dollar. The depreciation is believed to have been caused by bets that the U.S. Federal Reserve may move to hike rates next month, which would further widen its policy divergence with the BOJ. To give us an outlook on the yen, we've got Jesper Koll, expert director at Monex Group. Jesper, thanks for your time today. So we know that a weak yen makes imports more expensive for Japanese consumers, and that's not good. But back in May, not too long ago, Japan spent, $73 billion to help prop up its currency, only for it to go back down again. So do you think they will intervene this time around?
I think that intervention is likely, but it's going to be ineffective because, as we all know, you cannot attack the symptom, which is a weaker yen, when the underlying issue is the policy mix in Japan, negative real interest rate, the Bank of Japan very, very slow to hike interest rates, and Prime Minister Takaichi continuing to run an expansive fiscal policy that needs to be funded. And as a result of that, the drivers behind the weak yen that we've had for the last couple of years continue to stay in place.
Yeah, we'll get to those points one by one. First, I want to touch on the Bank of Japan. Last week, it did hike rates, but it is still low. Japan's rates are still low compared to other developed nations. So what does the BOJ need to do here? Is it enough to hike rates faster or give indications of kind of long-term rates?
Look, I mean, the Bank of Japan is very, very clear that they want to be very modest in their rate increases. They are still worried about destroying too much of demand. So from that perspective, yes, we will see further interest rate increases. But the question, will you get real interest rates? So the policy rate minus the inflation rate, will real interest rates actually go into positive territory? For that, they would have to double interest rates to at least 2%. And that, I think, is very unlikely to happen over the next 12 to 15 months.
Yeah, I want to touch on Prime Minister Sanae Takaichi, which you mentioned earlier. She is inclined to spend more, which needs low rates. But this weak currency is also affecting consumers with inflation. So how do you think she is viewing monetary policy now?
Look, I mean, the dirty secret is that the weak yen is great for Japanese corporations. For every 10 yen of yen weakness, Japanese companies get a windfall extra profit of around 8 percentage points. But as you point out, the weak yen is bad for the purchasing power of Mr. and Mrs. Watanabe. Takaichi, what does she think? I think at the end of the day, she wants strong Japanese corporations because she knows that at the end of the day, a strong Japan is going to come from strong corporate Japan rather than from a strong consumer.
Yeah. So, Jesper, what happens now, given the factors that you've outlined in terms of the Bank of Japan being cautious expectations of a hike in the U.S. and on the inflation front? Where does the Japanese yen go now, or just below 162?
Yeah, I mean, 3 years ago, I took out a position for dollar yen to go to 200. Now, that sounds like an enormous number, but I think, until the fundamentals are changing, interest rate differentials, Japanese fiscal spending, until that is in place, the yen is going to continue to be a pretty safe one-way bet towards further yen depreciation.
What does that mean for the economy, Jesper? Because if this hurts the consumer, that could spell more trouble for other parts of the economy.
I don't think so, because, again, it's great for Japanese industrial companies. And remember that Prime Minister Takaichi has just announced last week a massive, multi-trillion, it's 370 trillion yen, which is, almost 70% of the Japanese economy, a new spending package to actually excite and induce more business investment expenditure here in Japan for corporate Japan. So for the stock market, it's great news because corporate Japan gets the fiscal incentive to invest more at home. For the consumer, you've got the weakness, cutting the purchasing power, but that's something that Japanese people will just have to live with.
Yeah, and yes, we're wondering what this means now for Japan's exit from those low period, those decades of disinflation and lackluster growth. Where do you see, the broader economy going from here?
It's interesting. I think that, inflation is still vastly underestimated. I mean, you've got a record tightness in the Japanese labor market. You've got asset prices increasing. I mean, Tokyo real estate prices, are not the only ones rising. Now it's actually in the Japanese countryside as well that you've got asset price inflation. So you've got wage inflation, a tightness of the labor market, plus asset inflation coming through, plus the yen weakness continuing to put price pressure, hurting the purchasing power of the Japanese people. So Japan, corporate Japan, the metabolism is going to continue to go up. The Japanese consumer is going to have to tough it out, literally.
Yeah, Jesper, when we take a look at the stock market, you're seeing AI gains helping parts of the economy, parts of the stock market. I'm wondering whether a weak yen and all the factors that you have outlined could help broaden out those gains in the short to medium term.
I think that, the short answer to that is, I think, very limited, because to actually get a shift away, towards greater price power for corporate Japan that is indigenous, in other words, it's coming from at home, you need the creation of a much slimmer and competitive industrial structure. You need, more bankruptcies, more mergers and acquisitions. That kind of driver would broaden out the thematics in the stock market. The one theme I'm very excited about is actually Japanese financials, whether it is the mega banks, whether it is the regional banks, whether it is the insurance companies, because all this corporate metabolism is going to be fantastic for fee income for financial institutions here in Japan.
Yes, but before I let you go, I'm wondering what the U.S. thinks of this weak yen, because we know the finance minister of Japan, U.S. Treasury Secretary, they've held an online meeting last week. So will they feel pressure from the U.S. to do something about their weak currency?
Look, I mean, the reality is that the United States loves a strong dollar because it actually, reduces inflation pressures in the United States of America. I mean, if the yen weakens, Toyota can cut its prices in the United States of America. And as you know, much more important for the U.S. Treasury, for the United States, is the outlook for, interest rates, particularly bond yields in the United States of America. If and when bond yields in America start to go up, that's when, there is potential pressure from the United States on Japan. But, if you've got a modest and controlled increase in U.S. bond yields together with dollar strength, that is a win-win for the U.S.
Jesper, really appreciate your insights. The Jesper Koll there, expert director at Monex Group.